Hello, Ryan Garland. I am your host of The Paradigm Shift. I cannot wait to expose the true inner depths of institutional wealth building and how to dig deep into real estate investing. Hey guys, Ryan Garland here, founder and chairman of Paradigm. Thank you very much for watching this episode. We're gonna call it episodes because these webinars are just becoming more and more popular, and we host them all the time, once a month at least. And as you guys know, I have some of the coolest people ever, and I always chase down the right talent for everyone to kind of get to know who's involved in what we do, and ultimately the sophistication to help you as an investor potentially position yourself for your future and ultimately know which decisions you need to make and ultimately just know what's out there. And so I'm honored today to be two guest speakers, two people that I've known for a really long time. And I don't want to age us here.
Really
I know, sorry, but we have Kaaren Hall, which is the director of UDirect. She has actually worked with a lot of our clients for the IRAs and self-directed IRAs. And for some of our current network, you guys know that we have a lot of our investors invest into and use through their IRAs into our funds and into our investments. So I think it's really important because a lot of our clients don't know that you can use an IRA. And with the big, beautiful bill that just was released, there's a lot of information that I think everybody really needs to know. And Karen's going to talk on that. So Kaaren, thanks for being with us today.
Thank you, Ryan. Appreciate it.
And Nate is look, so let me just back up with Nate. Not only is Nate and I personal friends, we've got a chance to spend a lot of personal time together. He came out to Temecula and he's out in Dallas now, and he's got a wonderful family. He's kind of had a hell of a background, and he is just one of the most sophisticated securities attorneys in the space. And for those of you that are in my network, you guys know I try to surround myself around the talent, and you really want people to protect you and watch over you and make sure you disclose things properly and you're in compliance. And Nate has been just an advocate for us. He's been my biggest fan when it comes to how we operate and protecting us and making sure we're doing things right, and really opening up the floodgates of knowledge too on how we should not only solicit, but how look at the market and which way the world's going. But he works with so many different operators, and he sees things that do work and things that don't work, that it's really nice to kind of have him as a soundboard. So Nate, thank you very much for joining us too today.
Thank you. And I'm actually starting to blush. So
I did say you
down
look
at
good today.
least 20%.
I did say you're a handsome man. I was like, man, you look good every time I see you. I can't believe how good looking you are all the time. So we got to start this off. So I just want you guys, everyone to know that Kaaren Hall used to actually have a voice for radio.
Oh, yeah.
So Kaaren, give us just like your best voice before we start off.
Okay. How about this? Smooth jazz, 107.5, The Oasis.
I love it. How cool. Thank you for that. I actually want to listen to that later on this afternoon. Which radio station was that?
Oh, man, that was The Oasis. It was in Dallas, smooth jazz station. Been in a few different markets, but that was when I was in my 20s, which was obviously just, a scant moment ago.
That was just a few months ago, right?
Correct.
I love it. Yes. Well, you know what? Let's start with you. I think this is really important. The majority of our clients, again, are utilizing IRAs and don't know they can use their IRAs and kind of how the 401k rollovers work and so forth. So we're going to give you the mic for a few minutes, see if we can add some value to our network and kind of give us kind of an overview of who you are, background, what you do, and then you can talk on the big, beautiful bill, please.
Oh, I'd love to. Well, I mean, like we just pointed out, my initial or first career was in radio, which I did while I did other things, but 17 years I did radio, and simultaneously I did other things. I got into real estate eventually as a realtor for 1 year, and but property management, managing like little buildings and then bigger buildings, and I got some of that behind me, and then moved into mortgage loan servicing, loan origination. Became a real estate investor. So that was a lot of years too. And then I got out of radio quite some time ago. And then in the Great Recession, I can't do what I know. I need to do something new. And so I found a job, like a job. And I worked for a self-directed IRA company for 2 years and then broke off and started UDirect IRA services in 2009. So now we have $1.2 billion under management. So
that's an undertaking, and congratulations. And I think before we even started this, I had told you how impressed I was about you building awareness of your platform. And I think all of the content, which by the way, I think it's really important to just let everybody know, you wrote a book.
Oh, yeah, I did. Yeah, in fact, wait, I might actually have it right now in my
I
hand.
think that's really cool. In fact, I want to read it because I think there's a lot I don't know. I'll be honest. I'm kind of a
Yeah.
construction guru. I don't know everything there is to know about that stuff. So I actually want to read it. And so I want to be able to, what we'll do is at the end of this, in the content, we'll go ahead and provide everyone's contact information, where to get it. And I want you to be able to share that. So that's really important. When you get to a certain, level in business, if you're able to truly provide more information for people to really dive deep into it, that's huge.
Yeah, and it's I published this book, co-published with BiggerPockets, and so it's really a real estate investor's self-directed IRA book, and it's a guidebook, not a storybook. It's something like reference, like open it up, look in the glossary, find what you need to know, and one of those kind of books. So yeah,
and that's the marriage right there, right? Why did we bring on one specific person to talk about IRAs? I just have seen you for years work with majority. Seems like it's more real estate driven, and that clearly clears up a little bit of the question was, your background. Obviously, you were in the space, so naturally you're going to have that type of clientele.
Yeah, and with the self-directed space, the assets, in self-directed IRAs are it seems like about 90% real estate related. If it isn't buying the actual property, it's investing in a syndication. Nate, do you know what those are? You ever heard about that? Oh, maybe
syndication, maybe
once
no, you
or
could
twice
read my book or 10 billion times.
All about it. Yeah. Sorry. Yeah, the expert in syndications over here. So, so syndications are the number one asset class for self-directed IRAs, but syndication is a contract. I mean, the underlying asset's real estate. You can buy the brick and mortar, or you can make loans on real estate. So real estate is really tied to, I'd say, 90% of the assets that people self-direct into.
Yeah. And that's really important, just because, there's so many different ways to invest the IRA into a real estate product, through mortgage-backed securities and trust deed investing into multiple different funds, whether it's debt or equity funds. What are some other asset classes they can get into?
Well, I mean, cryptocurrency, right? That's really taking off. And, and so it's still the Wild West. It's not fiat currency, is it? It's not backed by anything. It's not like the Holland tulip, craze. I think it's got a little bit more substance than that, or quite a bit more. But it's early days. So, but that is a huge asset class for self-directed investors. People really like it because you can take a little bit of money and just kind of play, stick your foot in the water and see how it goes. So, and also we're seeing a lot of people in precious metals now too, with currency being a question. And currency has always been based on gold, hasn't it?
Yep. And that just spiked a little bit earlier. If you kind of, I know where Nate was going to go. Go ahead, Nate.
No. I've got a big question.
Okay.
Because we talk about what can invest through the self-directed IRA, but what can't be invested through a self-directed IRA. I think that's just as equally important. Yeah. Of course, real estate, you're good to go most of the time. Right. But what can't you do?
Well, the list is so short. I mean, it'll take 2 seconds. It's life insurance, contracts, and collectibles. So there you go. Life insurance, contracts, and collectibles.
Well, that's easy. Nate, question for you. How many of your syndicators and your clients and operators do you think are they targeting clients and investors with IRAs?
Only about 110%.
Right.
And so how much do you have any data? And I know that we haven't even talked about this. We're kind of going off the top of our head. Do you have any information on, let's say, for example, someone's raising $5 million, what the percentages of clients and investors are that are utilizing IRAs?
Well, I can tell you, you're actually capped. You're only allowed to accept so much IRA qualified money. And you can't go beyond, you really shouldn't go beyond 25% of your deal from IRAs, or the sponsors or you have a ton of red tape and problems to deal with. So it kind of is one of those, get in quick, because it's a limited space that the IRAs can actually play.
I have a question for you, Nate, if I can. So is it 25% even if real estate is the underlying asset? I thought the 25% was out the window if the underlying asset was real estate. Am I right about that?
But people aren't investing in real estate. They're investing into an entity that it's investing into real estate. And that's the differentiation.
Okay. Little Gene
So
Trowbridge, knowledge there from the past. So, okay.
Yeah, and it does matter what they're investing into. So one comment that I want to make, we work with a lot of syndicators, and I know, Ryan, you're a great guy, open to making deals, making things happen. A big thing that people talk about nowadays, it's called a fund of fund, where someone else can put together a fund to invest into someone else's syndication. So kind of a way that you can build a team together. But it's very similar that people think, oh, I'm just investing into real estate, but you're really not. You're investing into an LLC that is investing into an LLC that eventually owns real estate. And people just don't really think step by step through it.
Yeah, that's true. Do you know how, let me ask you this. How many of your requests to start a funds is real estate based, Nate?
It's a vast majority of what we do is real estate and real estate related, but I'll be perfectly frank. The reason that it's like that, you're doing real estate deals. You do many real estate deals. It's deal after deal after deal after deal. If I start a company, maybe I do a founder raise and it's limited who gets in, I get funded, and then I'm just focused on the company. I'm not trying to raise more capital. So a lot of what we talk about is real estate because that's where the deals are at.
Yeah. And, most people want to do SPV, special purpose vehicles, for each project that they're involved in. And it's really just because every project has its own merits. And it seems like that's where we've been successful, is kind of streamlining one project that people can really dive into to get comfortable and invest into, and really get to know it instead of a portfolio. We actually tried that with our first Reg A. It was kind of a portfolio. And that was also before the SEC really allowed you to do series inside the Reg A offerings too, if I recall. So that was really good. And I really wanted to touch on that too. And thank you for bringing that up, because I would have forgot. The whole fund to fund, that's really kind of that family office concept where you have someone who wants to manage money or can manage money, or someone that's aligned with, let's just say, us as a operator, and say, hey, I have a group of investors. I want to participate in it. I'm going to open up a fund. I'm going to put $100,000 or $200,000 of my own money into it. And then I have a group of friends and family, or, some other investors we've done other business with, but I love your model and I want to get in. So then they manage a fund, and then that fund invests into our fund. And that's what the fund to fund is, right, Nate?
Yeah, it is. But it's like nowadays, like the fund of funds is just kind of a nomenclature. Like people will set up a fund to invest into your specific syndication, not a whole bunch of deals like a traditional mutual fund or a private equity fund. It's just, let's be honest, some people are good at operating business, some people are good at raising capital. You're one of the outliers that can actually do both, but the guys that raise capital sometimes really shouldn't be doing real estate deals.
I totally agree there.
So they need to work with you and people like you to make sure that they don't get themselves or their investors in trouble.
Yeah, no, I appreciate that. Thank you very much. All right, Kaaren, let's talk a little bit about the big, beautiful bill. I think there's some content we want people to know about. And that has kind of been one of those things that a lot of people are calling us going, hey, we need advice, and legally we can't, so this has really given us the ability to kind of shed some light and utilize our resources to paint the yellow brick road. So if you don't mind, where are we going in the world?
Yeah, it's big, it's beautiful, and it's bringing in alternative assets, but not like self-directed IRAs. And so there's a lot of misconception about that. So what's on the deck right now is that 401ks, employer plans, 401k, 403b, 457s will be able to invest in alternative assets. With a self-directed IRA, you just go grab that asset. It won't be like that. So in order to invest in a lot of these alternative assets, and of course, we've got, the experts here, Nate, expert of the accredited investor. So you have to be accredited a lot of times to get into these deals, right? So say, for example, you're working at Home Depot and you've got a 401k and you want your 401k invested in alternative assets. Well, you're not accredited, possibly. You might not be an accredited investor. And so you couldn't get into that deal directly. But what would happen is, say John Hancock is the plan administrator here, whatever the big company there, they're going to create a fund of alternative assets. So it's that level where they're getting in, they're the alternative, or sorry, they're the accredited investor. And now a person from Home Depot invests in their fund, not in the asset directly, you see? And so that's how you get past the accredited investor portion, to have people with a 401k working a regular 9-to-5 job investing in alternative assets in this way. So there's one thing. But another thing that's incredibly important is that, yes, this bill passed, it did, but there's still some time for oversight. So the Department of Labor said they're going to take a 180-day look at the fiduciary responsibility, because we've got companies, we have 401ks for our companies. So we're a trustee of that plan. We have a fiduciary duty. And if we allow our employees to invest in scary assets or dangerous assets, we could be liable. So the Department of Labor is taking a look at that. Maybe they're going to indemnify, plan trustees, like employers. So we'll see what they do, but it'll be 6 months out before the DOL is going to sound off about their findings.
Got it. Well, let me ask you this, because that kind of, I love it. I'm actually going to learn a lot with you here. And I thought I didn't know a lot, but I'm humble enough to say I don't know everything. Okay. So let's dissect that a little bit. So if you have a 401k, let's say it's housed at like Fidelity or what's the other few other ones? Schwab, yeah, Charles Schwab, what have you. The operator, someone like me that manages the fund manager, we would have to submit that fund, right, and get approved on that platform,
yes,
right, which also requires audited financials and yearly audit, right?
Yeah, well, it's TBD. It's early days, right? It just passed about a month ago. So,
well, the standard process now for RIAs and so forth on some of the larger outfits is the same way. And if you have a Reg A, let's say you're not accredited, I don't think you're talking more of accredited, but even with Reg A's, you have to have audited financials. Nate, correct me if I'm wrong.
Yes.
But if you're going to go after the accredited space, and that custodian in essence is operating as the accredited, so we would definitely need to be approved. Is kind of where I think it would be. I may be wrong, and you're right that you have to have 180 days to have to figure this out. But I think that's probably the process that we would go.
Sure.
They would vet us as a good operator, and that we have the right practices in place, and they would look at who our securities attorneys are, and they would want to see our infrastructure.
Absolutely, because they're in a way they're representing you, aren't they? Out to the general public. So we'll see how this goes, but that's a logical path because it's sort of the way that things are done already.
And I would say we've lost a lot of investors because they've wanted to use their 401ks and they couldn't because they're either still employed or a lot of FedEx, a lot of law enforcement, people in the medicine world, so forth. So, really had to pass on a lot of clients, and they're like, well, then I'll call you when I retire, and I'm like, well, when's that? I can't roll it over. So, okay, anything else you want to touch on?
Well, I think that's the latest, but I just think briefly a self-directed IRA, just to say they've been around 50 years. It's nothing new, and it's a simple process. After you've done your due diligence, then that's the hard part. Then you open an account, takes 10 minutes, fund the account. With either a rollover from a previous employer plan, IRA to IRA, you could transfer an IRA, or the third thing you could do is contribute from your own checking account. So open, fund it, and then invest. So you give us the docs, and the IRA is the investor, not you, the person, but the IRA entity is the investor. And then we fund that deal from your IRA. All the proceeds go back to the IRA that owns it. Yep. And you just have to make sure that those proceed checks are always made payable to the IRA and not if they're ever accidentally made payable to you, just return that check to your don't deposit it. Just nicely send it back. Say, oh, little mistake here. Let's fix this. Because if you put that check that belongs to your IRA in your own account, that could be, it could lead to a prohibited transaction. So that's an easy way to stay clear. Open, fund, invest, basically.
So Rachel has a question. It says, can you invest in an oil and gas through an SD IRA?
You can, but it's a really interesting asset class. It's interesting because when you invest personally, like outside your IRA, you can get some massive tax breaks. And it can be great for you to do personally and not with qualified funds. Now, in qualified funds, a lot of times, I know that some of the big oil and gas companies that are out there, they'll have a separate asset for self-directed IRA accounts. Maybe it'll be the land, or it will be the business or something. It won't be the actual oil where you get the rights and and those massive tax breaks. So there are different ways for a self-directed IRA to invest in oil and gas that are different than a different way you might invest in personally.
Yeah, and I think you're right. There's multiple ways to invest into the oil and gas industry overall. It just depends on the nature of the structure. Great. Great. Is there anything else that we want to touch on with the big, beautiful bill?
No, I think that's how it applies to retirement. Now, we had Secure Act 1.0 in 2019, Secure Act 2.0 at the very end of 2022. So the federal government has really tweaked retirement plans. They're kind of done with that. So I'm very happy. It's changed. We've had some changes. So that's happened, and now we're going forward. But this isn't going to change self-directed IRAs. It's going to change the employer plan.
Yeah, and to be candid too, a lot of our clients, especially if they've been with us for several years, you kind of get to know them on a personal level. Mm-hmm. And I would say, a lot of institutional trading platforms, they're just not creating the returns to allow people to feel comfortable that they're going to be able to retire and have really the wealth that they need to enjoy their lives. Or even, most people are starting to get worried about healthcare costs.
It's true. Yeah, you can self-direct even an HSA, a health savings account.
All right. Well, it's my turn to moderate because Ryan froze up. So got a couple of questions for you myself.
Okay.
One from Anthony. There's a lot of heavily discounted Roth conversions. Could you speak a little bit to what a Roth conversion from the IRA to the Roth actually really looks like? I mean, it's something that comes up so unbelievably often.
Yeah, that heavily discounted really hits.
Yeah, I don't know what that even means.
No, well, I do. I mean, if you're going to say like, oops, guess what? My traditional IRA really isn't worth that much. And then I'm going to put it in a Roth. Oops, suddenly the value increased. Like, who knew? That looks like Roth fraud. So don't do that. But a typical, normal, traditional to Roth conversion is simply you open two accounts, a traditional and a Roth. You move the assets, could be cash or assets. You convert them from one account to the other. And the dollar value, the appraised value of the amount you converted, you're going to get a 1099 with that same number on it, and it will be taxable to you at your regular tax rate. So you can do that, pay the tax now and not pay the tax later. So it could be doing your retired self a favor today.
Okay. So some more questions for you. Yeah. Ryan, it's nice to see you here. Like, we don't really need you.
I'd like to say I had to use a restroom break, but that really wasn't the case. No.
All right. I know it's so confusing for both investors and operators, like the investment process with an IRA. Because it's like, oh, I invested. Well, did you invest or did the custodian invest? You fill out the paperwork. Do I fill out the paperwork? And there's just so much confusion around this. Yeah. Can you clear the air a little bit?
Oh, I sure would. For us, we have people vest as, a non-trust custodial IRA. So actually the account holder is signing the docs, in representing their IRA. So that makes things a little bit, actually quite a bit easier. So that's nice. But then IRAs aren't difficult. Once you get the docs, it really can be very, very simple. Where do you see a snag?
Everywhere along the way, because you look at like an investment document and then there's the line that says investor sign here.
Oh, well, okay.
Do I sign it?
Yeah.
Did the custodian sign it? I know they're sending in the money. I'm not sending in the money. So it creates so much havoc. I know there's even some medallion, and I don't even understand this medallion, but there's even a stamp there.
Yeah, I know. Well, I think so. So if it says FBO, so if it's like Nate, or if it's the custodian for the benefit of Nate Dodson's IRA, the custodian's going to sign that. The way we vest is that the account holder can sign. Now, the medallion signature, and if you don't know what that is, it's sort of like a notary stamp. That goes on the transfer document. And typically that is for moving large amounts of cash. It's kind of an old-fashioned sort of thing, but still sometimes it's required to transfer from one IRA to another. That's when a medallion stamp comes into place. Sometimes that happens. You can usually get a medallion stamp at a bank if you need one.
So what you're really saying is if anybody asks for the medallion stamp, they're just old-fashioned and they probably should get with the times, talk to someone like yourself.
Well, it's about security, it is. And so every institution or every company is going to have its own, guidelines, their own security measures or how they want to do things or their procedures. And so a medallion stamp is one of those procedures, or it could be.
I got a question, Kaaren. We're going to pick on you, I think, the whole time here.
Okay.
So one of our sticky points has always been processing. That's one of the reasons why I reached out to you. Is really trying to just make it smoother for the client, because really there's a lot of information and content that they don't understand, and they really don't know where to start, right? So let's talk about the process with you. If let's say someone's going to move into a self-directed, open up an account with you, what's the process? And then what's your so there's a couple questions. What's the process? And then what would be the engagement level with someone like us, as far as we refer the client to you, investor opens up an account, and then they want to invest into one of our funds. Kind of what's the standard protocol for you guys?
Well, it could hardly be easier. You could just, do an email introduction. If we just want to go bare bones, you could just do an email introduction. And then from then we pick it up. We offer always a free consultation with that account holder, that investor. And we want to talk to them about, well, tell us about the asset. What are you investing in? And tell us more about who owns the asset, because there are rules that we haven't covered yet. They're called, it's what you avoid. It's not what you do, it's what you don't do. They're called prohibited transactions. So we're going to list them like, hey, is this prohibited? So you don't have self-dealing. So your IRA doesn't invest in an asset you own, they're prohibited transactions. So we're going to listen to the investor. They're going to tell us about their deal. And then we want to answer all their questions. Maybe they don't understand, I don't know, maybe how to do this, or the tax deductibility or something like that. Now, of course, we're not tax professionals, but we can give general, guidance on how that works. So very simple. You open an account. We have a digital form, and you fill it out. Just so easy. You move the money in, and we have staff that's going to really hold your hand through that process. So while you're waiting, because it can take 1 to 2 weeks for another custodian, to move that money. And so while we're waiting, then we're getting the documentation from the asset sponsor. We're going to review it. And typically a lot of this is the same, right, Nate? And when you're looking at a syndication, there's a certain structure that you're looking at. So it's not like each one's vastly different. So it's not that complex for us to look at it and know what needs to go on there. And so we hold the investor's hand there too, to make sure their docs have the right information in the right place. And then we also want to take a look and make sure that the investor is actually receiving an asset in exchange for their money. It's just something that we like to do. But 100% of the responsibility is on the investor, the account holder, to make sure they don't commit a prohibited transaction and to make sure that they're doing it right. But we're here just to guide people that whole way. So that's basically how it goes soup to nuts.
Yeah, and what we do is we typically will send over the operating agreement, subscription agreement, and they would take a look at it, read it, get to know it. And then obviously, because the IRA account is making the investment, we have to make sure we get an account number from you guys. We put it on the document, we send it out for signature, and then we send it to you. So really, and your team. So really, are you signing it, or are the investor signing it? Investor signs it, but it's really signing in the behalf of the
non-trust custodial IRA, right?
Perfect. Got it. So as long as we have the account number on there, that's really important, and the name of the custodian, correct?
That's right. That's right. And we'll give you everything, and it won't be a massive mystery at all, because it's very cut and dry. We do this 100 times a day at least. So
yeah, I know you guys are $1 billion under management. I can only imagine at least that a day. So Nate, do you have any questions?
Yeah, I've got a question. Ron's got the same question. Now I made my investment. I got to get my money back.
Yeah.
What does it look like working with you? Can't the syndication just write me a check, or what does that process look like? Because all of a sudden you're in the middle.
Right. Okay. So someone, maybe they invest in a syndication. They want to leave, like an early exit, you mean?
Early exit.
Yeah. So we'll ask them to talk to their syndicator, talk to their asset sponsor, and tell them what their needs are, because sometimes there is an opportunity for someone to get out of a deal early. And so that's something that an investor would negotiate with the actual, company they invested with. And then that company would move the money into the IRA if, once they reach that agreement. That's how that would work.
Yeah. And that's, we get that all the time, especially when people go through hardship,
Right.
We get that quite a bit, believe it or not. Sometimes we have the ability to do it, and then sometimes we really just don't. It just depends on the nature of the project, where it's at, and so forth.
You bring up a really huge point. It really triggers something for me to say, and that is, sometimes when people invest in syndications, now tell me what you think, but they don't necessarily understand that there's no promise to repay that. And what they're really doing as an investor is like partnering in a way with that asset sponsor. Like, hey, we're both going to try to make this work. We're going to do our very best, but we're sharing the risk.
Yeah. And we said the same thing. We're all in the same boat with the same row. We're just the one with the strong back and doing all the heavy lift to try to get the deal done. Right. And that's exactly, I love the way you said that, because that's why they call them limited partners. You are a partner, in the investment. So it's true. And then, again, the nature of the investment too, a lot of the times in real estate, depending on the nature of it, and I'm going to talk really kind of our side, because we do a lot of ground up construction, right? We have to build the thing. We have to have a capital event, whether we finish it, refinance it, or sell it. We really can't return capital. So it's so important that clients, investors really know what they're getting themselves into. And when they part ways, try to stick with the length of the project, but also know, hey, the world kind of kicks us in the teeth with tariffs and other things. Sometimes it takes longer to build or develop. And we've had that too. We've had a lot of ups and downs. And Nate, the stories, man. You probably get it from everybody. Everybody across the country has issues, and it's hard to get materials, and certain electrical components, as an example, has been kind of a pain in the butt. Garage doors for us has been a pain in the butt. It's just one of those things that to make big money, it's not easy. That's what I always tell you. It's just a fight all the way through. We're just.
Then you got the black swans, like all of a sudden rates go up 4,000% or something like that, and you didn't really plan for. We've seen a lot of, even today, we have IRA account holders, investors who have invested in syndications, and they got a capital call. And some of them don't understand why they would get a capital call. So it's just so important to understand your asset before you invest. And that's because it's like, no, you're supposed to pay me. I don't pay you. You pay me. But you're sharing that risk. Well, we need to do this. And we, because of the rates went up, we had to reinstate our debt at a higher rate. And so now we've got a different cash flow, and then you explain it. We're all going to win, but we all have to row together. I think that's what you say, right?
Yeah. Oh, yeah. And probably in some cases more than that. We really, the idea is to understand really kind of the sticking points of the project. And then, again, I'm just kind of speaking for us, what the sticking points of the project, what are the main hurdles? And I think with our experience now, we really can articulate it in a way that pretty much anybody can understand our hurdles. Right. And that's one of the things too, is we've had people where they're like, well, we really didn't know what we're getting ourselves into. We're like, okay, we don't want people to feel that way, So we're spending more time doing these type of things where we're building the content, allowing everybody to take as long time as they want to watch videos, read the documents, ask questions from either anybody on my team or myself, and really kind of give them an overview. And what I think helps, and I say it respectfully, a lot of times I like to get to know my investors and kind of have they've invested in something like this before. How, what do you do for a living? It kind of gives me an idea where they are and knowledge, so I can then touch on things they may not know or what they should know.
Know your investor is huge, isn't it?
Mm-hmm. And when you have a good, one thing I've realized is that when you communicate well and you're transparent, it's okay when you have hardships. A lot of people just they're to ride the wave with you. They're totally okay. It's the non-communicative holding things back that really creates a problem, right? So when you really do open up to your clients and kind of give them everything to consider on the front end, you can call them down the road and say, hey, are you sitting down or standing up? Sit down for this one. But hopefully we have a solution.
Some people, it's like their pride. They don't want to say we're having a problem. And that's when an asset sponsor like you, I mean, you need to be a humble guy, because you've got to say, you know what? The world isn't perfect. And here's an example. Like you said, are you standing up or sitting down, and we've got to think, but we're going to get through this. And this is how, and you show them a plan forward, and like everybody gets it. It's what hurts is when someone's afraid to say that there's a problem instead of just, hey, life happened, here we go. So when people are afraid to tell you there's a problem, you need to be knocking on that door as an investor. Like, look, I know there are problems. Just tell me what it is. Right. Yeah.
If I could speak on this just a little bit, because of so much of what I've seen in the syndication and frankly, just economic world, macroeconomics. It's been tough for a lot of syndicators over the past couple of years, with costs going up, inflation, interest rates going up. But one of the toughest thing that people don't recognize is the stock market. It's been going gangbusters for the past few years. That's been a lot of where to invest, but now it's like this big bubble. And there's such a huge risk of that bubble just bursting. I mean, you talked about the Great Recession, 2008, 2009. I was in the epicenter of Las Vegas at the time. These things happen, and when they happen fast. And so it is really right now that, if you're heavily in the stock market, investing into those hard assets, that regardless of what happens, there's value in the real estate. There's that perfect saying, or that traditional saying, there's never going to be more of it.
Yeah, that's so true.
I do think over this next year, I mean, it's been a tough time, but interest rates are starting to come down. The government is at least trying to stabilize pricing to help. But also we're going to start, and it's already beginning, having an outflow from the stock market into real estate. So the gains are starting to, well, just frankly, look nicer where the real estate markets are going. So I just kind of wanted to give that more macroeconomic, let's be honest about what's going on.
Nate, there's so much truth to that. I would agree with you. When you watch Warren Buffett, pull $278 billion out of the stock market, put it into a what was it? He put it into, I think, put it in a JP Morgan. He put it in some sort of bank account, in essence, to just.
He owns more of the treasury bills than the Federal Reserve does.
Oh yeah.
Like, he's pulling out.
Yeah. But did you see
smart money?
What was it? $500 or $800 million in DR Horton and Lennar, and he went all in. He went into a cash position for a very long time, and he just started watching. He goes, all right, I'll go ahead and dump $800 million into, residential builders. I thought that was pretty impressive. And if you look at those builders, and that was I think that's the key. Like, where is the capital going? That means they're seeing something we're not necessarily seeing. It's great to kind of keep an eye on that. But they invested into two builders that I think are two kind of different worlds. And that was a big eye opener for me. Lennar, I would say, is probably a higher end builder. And most times, the more primary markets, they love kind of an upper class, larger lot, little higher dollar amount price point. And then you have DR Horton, which is a little bit more on the attainable side. So the fact that he just went into residential all the way through was really impressive for me. And that's I think that's a testament to what you just said. The stock market. And then we have clients too that are just so tired of the volatility and the anxiety they get with the market going up and down. People are liquidating now going, I see it, I feel it. I've been doing this for 20, 30 years. I need to get into something that's stable, that it has a 3-4 year run, and I just don't have to worry about it. But I get some cash flow. Maybe they diversify into some accumulation and equity play. They get some cash flow. They try not to lock up their capital too long. That type of stuff has been kind of the nature of our conversations lately. So I really appreciate you talking on that.
I mean, out of the recession, didn't home builders stop building for about 10 years? Isn't there still like a deficit that has never been brought level? I mean, they just haven't built enough houses. So I could see that. And there's definitely supply and demand. And throw in there people probably like all of us who have houses that are at 2.75%. Am I right? And so would we ever sell that house? No, we wouldn't. So it locks up that inventory. So we have to build. That makes a lot of sense to me.
You nailed it. All right, Nate, since we kind of stole this for the last 30 minutes, I really wanted everyone to get to know you more. So, and if you don't mind, let's go a little bit about your background. I think what I love about you the most is not only my personal relationship with you, and I can tee off on that for hours, but I love the fact that you acquired a law firm and that a lot of your old attorneys actually came and now work with you that you've had work with you in the past. And so, I think that's a niche in itself that a lot of people don't understand, because that's really kind of a private equity play. I mean, you are that mind. And then you obviously have the polish in regards to the security side. So I just want everyone to really get to know you a little more, because I would recommend you, and I already do, as you know, I send as many people as I can your way. But anybody who's watching this that has thought about opening their first fund, or it's a 10th fund, or it's a unique structure that you just need other people as an advisor to kind of guide you in the right direction and even bring that insight about the market, and will it be successful? And I think that's really important. So Nate, if you mind, give us a little more about your background.
I will do the humble brag as good as I can. But no, I'm not just like that traditional attorney. I'm not just out there. I've honestly actually never even been to court and like argued a motion. It's just not what I do. I used to be a stockbroker. just selling investments, just like Ryan, just like a lot of the syndicators out there, going and, hey, what makes sense? How do you move money around? One of the first lessons I got as a little kid, learning how to read on the Wall Street Journal. If you want to make the money, you got to learn to work with the money, how to invest the money. So I became a stockbroker after a little while, and then we don't need Ryan. So eventually I end up going into law school. That was actually after the internet bubble popped. So have a lot of experience with bubbles popping. Ended up becoming an attorney, went right back to doing the investing, but on this side, it's on the representative side. I was there in Las Vegas in 2008, and you know what? It was the other bubble popping. Now this was real estate, but you know what? There were more millionaires made out of that recession than ever before.
Yeah.
So it's like, that's huge. But you know what? I'm also a big beneficiary of that, because then I started syndicating with partners. And we acquired 4,000 multifamily units over a matter of 4 years. I don't even know, Ryan, if you knew this, but
I knew you were doing it a little bit, but I didn't know you were to that level. That's huge.
talk the talk, walk the walk. And then I started buying law firms. And actually, I have my 5th law firm is closing this week.
Congratulations. How cool.
Entrepreneur through and through. And I love to help people reach their goals. I love business, the strategy, the creativity, and how to reach really the new heights. And I'm here to help you and everybody else that doesn't understand UBIT and whatever else comes to the table, because I think that's one of the most.
I get asked about that the most.
Nate, you know what? So let's talk. I got a couple questions for you. So one, someone that's in the real estate space, like an operator like me, let's say it's their first fund. What's one of the hardest things to overcome for a first-time fund manager?
I'll give you the 2 worst things in the world is if you open up your own fund, you don't have a track record.
Yeah.
Yep. You're raising capital, you're telling a good story. Here's what I plan to do. But if the proof is in the pudding, they don't have that. And that's really where it's easier for people that are just getting started to do more of a fund to funds, meaning working with experienced, accomplished operators. But also you bring up a fund. A fund traditionally means I can't even tell you what I'm going to invest into, because it's into a bucket of money that I'm going to invest someplace. That's way more difficult. And frankly, investors, they don't like it quite as much because they don't know where the money is going. They're not looking at the land, the demographics, what's getting built there, really able to judge the operator beyond just the, hey, I'm going to raise some money and invest into real estate. So between the unknown of I don't know what to invest into and the I don't have a track record either, those are the biggest hurdles of opening up a fund. And you know what, to be perfectly honest, that's where both of those biggest hurdles get solved by working with current operators, the guys that have already been there, the guys that can say, this is the property, this is the deal that we're working on. This is my track record. And then as a new fund manager, you can borrow that credibility, because it's not really on you to make the money. It's on these guys to make the money.
Right. Totally agree. Okay. So let's talk about, let's say somebody wants to open up a fund. What's the process? Let's say I have a friend I want to introduce to you. Obviously we email you, or they contact you guys or call your main line. What's the first step, if you will, besides an engagement letter? We all know that happens. But let's talk about what do you do? Is there a a consultant, an hour consulting, kind of getting to know who they are and what they're trying to accomplish?
You know, we're unique. So I'm going to speak about us and then them being all the other attorneys that are out there. You know, we expect people to just come to the table with a napkin and a dream. What are you trying to accomplish? And then we take the time to back into not just what's legal, but the reality of what's going to sell, what are investors into, what terms are expected in the market nowadays, because that always shifts and changes. So great to work with the experienced guys. They know what they're doing. But the new fund operators, I haven't really done this for a long time. That's a lot of where we take them by the hand, spend that time going through more of a consultative process. And it's not until somebody says, okay, I get it. I understand. Here's the deal. Here's the terms. Now let's go. And at that point, we get everything together. It's a couple of weeks because we know what we're doing, and this is all that we do.
Yep. And you have a great disclosure package. You kind of think it all the way through and let everybody know the risks, which is really important that people know what the risks are before they make the decision to invest. So that's one of the things I love about you. And I think that's where a lot of operators, including myself, when I first started going, hold on, you put all these risks in there. You don't want to scare people away. But there's so much truth to just full disclosure and explaining to people what they're getting themselves into. And that's what I love about you guys. And the more I season myself, I'm not trying to say I have this gray hair here, but the more I season myself in the space, the more I actually truly enjoy people believing in my dream. So it's more like if I can articulate what we're getting ourselves into as best I can, and someone sees it and feels it and excited about it, it makes me feel great. Even when they know the risks, they're like, okay, I get it. And what's nice is that I it's my own coined term, forgive me, but I call it smart investors. These are these investors that know what they for example, they know the area. Like I'm going to use Lake Havasu for example. A lot of my investors, they are from Lake Havasu or they travel out here. So they know the area, they know the demand. They already have their own experience with that area, right? So that's what I love about working with investors that know what they're getting themselves into, but then also kind of getting into the weeds. And a lot of times I'm learning that people ask questions about maybe construction that they may not know, but they feel comfortable enough to ask questions that's not really, relevant to the investment strategy, but they just are curious about what's happening, and that's the fun part, and I think when you get to a point as an operator and as a fund manager where you can have fun with that and you're building those relationships with your clients, that's where you win. That's where the success is. And that's when, regardless of what goes on, where you have a win or a loss, a lot of investors will trust in you and keep investing with you, even if you've had some hard times. And so again, that's that relationship building that I try to teach. In fact, Kaaren, when I'm going to be in Tulum and speaking at Rich's event, I'm actually going to bring that up about how this is such a relationship business. If you don't put that first, you're not gonna be able to really be successful. All the way down to my contractors and my subs and the city, right, for approvals and planning. I mean, it's a relationship business from soup to nuts. So I try to advise people to always make sure that you look at it from that standpoint. If you start off that way, you'll probably be successful.
People invest with people they trust.
Yeah, and there's so many. I tell everybody else, you can log on to social media and find another investment, another syndicator out there. People invest into the operator. They really do. They want to know that that's someone they feel good about. They get the warm and fuzzies. They trust them, and they're going to protect their investment the best they can. They can't make promises, but they can make the best. Try to do the best they can, and that's always important. So, all right,
you bring up social media, and anybody can get on there and see there's 10,000 ads. But the reality is the guys that are promising the world, and so many of them are like, you can get this 25% annualized return in 2 weeks.
No.
I mean, you have to look past the pretty promises that don't really work out. And it truly is about the relationship and about working with the people that, of course, know, like, and trust.
Yeah.
We say that, but it's honestly, I would tell my grandma that make sure you're working with people that you, again, know, like, and trust.
Mm-hmm. Let me ask you this, Nate. So one of our funds, our secured income fund's more of an institutionally designed fund. It's more mortgage-backed securities. It's a lending arm. Kaaren, a lot about this. What we do is we try to provide a lot of supporting data, why this investment is a good idea, or what we see that's relevant, and then let investors see that data as well. Green Street Advisors is a great company to pull from for data from an institutional level. They work with pension funds, hedge funds, anybody in the real estate space, from hundreds of millions of billions of dollars in assets to track, but also provide that type of data to operators to then pass on to their investors. Would you say that the fund managers, the operators, the more successful ones are the funds that are created with that type of data and third-party reports and transparency components to it?
I think you just mentioned the most important thing is the transparency for the investors. Of course, to make the right decision, you need data. Data is the most important thing in the world. People don't even realize that. I mean, think of all these internet companies, the Amazons. It's like the reason why they're huge and big is because they have all the data that you don't.
Mm-hmm.
The same thing applies in doing real estate deals. The data is out there, but you know what? The institutions, the private equity, the guys that are in the business, they receive it for making the right decisions for their business, but also for the investors. You should be asking these same questions. You should be asking for the same data. And if the guys that you're working with don't have it, maybe they're not making the best decisions. So having it, communicating it, but also being transparent, the good, the bad, the ugly, this is what's going on in the world, is truly what makes the relationship work from the syndicator to the investor and building that confidence.
Let me ask you this, and this is going to be a little loaded, so you may have to think about it. Which asset class have you seen, and let's talk about recent, because we always have cycles, right? So let's just talk some about recent. What, with the operators and everyone that you work with opening funds, what asset class seems to be shining the best and is a good strategy moving forward?
Hotels, hospitality.
Really? I like that
luxury.
Idea. Is it the whole Airbnb thing too?
Airbnb is actually a thing of the past.
I know.
It is not the best place to invest today because it's oversaturated, it's expensive. And of course, now the hotels are coming back and saying, you know what, if you're our competition, we're going to try to squash you, but we got some money, so we're going to try to get some regulations to make your life tough as well. So don't necessarily encourage people to go the Airbnb route, but hotels, hospitality, and also, I hate to say this and admit this, our economy is great because of the top 20% of the wealthy and the earners. So luxury, condos, luxury, building the lake barns, like the things that the wealthy can afford. This is different from the past.
Yeah,
like they have the money, they can do the deals. Yeah, so that is what I really see working out today that has just been different. I mean, you talk about cycles. Here's a cycle of where we're at, and it's really macroeconomic causes.
Are you seeing a lot of operators starting to move in different markets geographically as well? They're not just, let's say someone's from Southern California or just Dallas. Are they starting to venture off into other states and other markets? Are you seeing that diversification now too?
We see that.
Yeah. Kaaren, you're seeing that a lot?
I mean, a lot of it, where the hot spot to do the deals, it always moves. Texas is always a hot market. Nashville has been huge for a long time. Arizona goes back forever. California,
yeah.
But it is like
how do you really feel,
some of the well, I was thinking about moving back there, but then I bought a place in Spain and I'm so much happier than ever.
Wow.
And the price point, I remember when you sent me the video of that place, I'm like, wait, how much did you buy this for again? That was awesome. I mean, you were like, it's beautiful. It's beautiful. Good for you. I remember you were back towards like Fallbrook, wasn't it? Weren't you looking at something out in Fallbrook?
You know what? Just total side story. Yeah, but the three things that I was looking for: near the water, with space, and a good school district.
Yeah.
You could have 2 out of 3, but good luck finding all 3. So we kind of settled on, well, if we can be right next to the water in Spain, we already got the space and the school district here. We can just fill in the pieces. And, my girls, my wife, we love it. So looking for our best life. And you know what? That's because, frankly, we invested smart. We work with the right people, and it's all about partnerships, to be honest.
I love it. Okay, so let's talk about stuff that also is really important, in my opinion, from a compliance side. So, what do you advise your clients, kind of the best practices? I know that's kind of a loaded question because it can go a million different ways. Just whatever is off the top of your head. what's best practices when it comes to compliance, whether it's, from, let's just say it's a 506C, a private placement memorandum. Do you advise that they should have audited financials? Or do you, depending on the nature of it, like, let's talk a little bit about the compliance, the accredited investor side of things as well.
A little bit of a loaded question, as you were saying, but when we are working with somebody, the first question is, where are your investors going to come from? How are you going to find them? Because that really dictates what regulation you can work with.
Right.
So accredited, non-accredited, there's strategies and styles for all of that. So best practice is figure out what makes the most sense for your business. Best practice in working with investors is say what you're going to do and do it.
And you guys, I love the fact that you guys are, for a long time, were looking at a lot of our marketing content before we sent it out. I thought that was really neat and really amazing because when we were first getting into it, we didn't know we had to have certain disclosures on our pitch decks and even some of our marketing content on, let's say, Meta, right? Or some of that. And I thought that was really neat because disclosures are such an important thing when you're dealing with, raising capital and solicitation. I mean, you're dealing with SEC oversight. And I think a lot of people get in trouble if they're not disclosing it properly. And I think that is where I try to tell my friends and family that are getting into opening funds and managing that you really want someone that can help you oversee that, but are going to basically help protect you. But it's at the same time protecting the investor because you're ultimately just providing disclosures of what you need to know before you get involved. But then also saying, hey, look, if your investor signs off on this because they've read everything, then you're protected as well. And I think that's really important. And what I was also telling people is a lot of times you have, investors go through hard times that are in a fund and you have multiple investors in that fund. And so the last thing you want too is maybe one person that just has gone through a hard time to have now a direct impact on all these other people too, right? And that is something I think most people don't talk about that I wanted to bring up that, is there a standard practice? Like, let's say, and forgive me, I'm just going to throw this out there. If let's say if someone has, is raising $1 million and they have more than 4 investors, 5 investors, 7 investors, is there like a standard practice to have a disclosure package?
My opinion is 2 investors, and I don't care if it's a small investment. It really is about disclosing what you're doing, disclosing about yourself, your business plan, and the risks. People ask, well, when do I need to hire a securities attorney? Well, the answer is anytime you're pooling together people's money. And you know what? There's not a grandma exemption. Like, even within your family, you got to pay attention to these things.
Yeah.
But the real reason why to have a disclosure document, even if like legally there's some things that you don't have to disclose, best practice is to make sure it's all disclosed because it's not about when things go right, it's about when things go wrong.
Right.
And besides pissing off grandma, you got to make sure that you're protecting your investors to begin with, but ultimately protecting your family. And by doing things right. And if you don't disclose what you're doing, things go wrong. That's when lawsuits happen. That's when complaints, that's when audits happen. And all of a sudden you say, well, I told you. And then the investor says, no, you didn't.
Yeah.
You told me something else. You lied to me. Well, now, if it's in this disclosure document, this is what I said is going to happen. This is what it says is going to be the risks. Well, now it's in writing, so don't lie. There's always a risk in investing.
This is why we always tell people, understand your asset. And I think you just told a self-directed IRA investor how to do their due diligence. Read those disclosures. Read the disclosures first. Read them carefully, and you'll understand all the risks.
It really is so important. Now, more on the sophisticated operators. Do you guys provide funds that have the correct verbiage for placement agents, RIAs, broker dealers, all of that fun stuff that is also a little more complicated? And then also, can you guys take an operator, let's say someone who's very seasoned and has a track record, do you have the capacity to build out an offering to go public?
Yeah, we help with, I know we are called crowdfunding lawyers, but we do everything from those little deals all the way up to those IPOs and pubcos and REITs. And yeah, I mean, we've got some well-known names that we work with that are doing massive, huge deals that they started with a little syndication. And now some of these people are nationwide. So it really is, yeah. And that's part of the planning process. What are your goals? And if you're looking to use broker-dealers, RIAs, there are certain things that you need to build into it.
Yep.
And again, just don't trust every syndication attorney, because a lot of them are one-trick ponies. Think that you don't need to worry about 25% with real estate.
Well, okay. So let's talk about something even deeper, because I really do value our relationship. And and for those of you that can imagine, with an operation that size of ours at this point, we really just need those people to watch over us. Nate, those guys that started with first syndications and now you've kind of taken them 0 to 100, how's your relationship with those guys? Is it more personal? Do you have in-depth knowledge of their friends and family and talk to them all the times when the market's getting weird and what the hell's going on? I mean, you have a personal relationship with your operators.
I hate to say that is a benefit and an absolute curse.
Yeah.
And I still have the same clients from 16 years ago.
Yeah.
Like, through the good times and the bad, they have issues that, you have a problem with a project, it rolls into family and stress. So part therapist, part best friends, part drinking buddies.
You're like, I could have sworn I didn't get a college. I didn't go to school to be a cosmetologist. Jeez, I didn't know. That's so true. You're kind of a psychologist all the way through. Well, I really appreciate that. Nate, is there anything that you want to touch on that maybe I didn't, that you want the audience to know?
You're covering everything so amazingly. I'm just here to be that, as you mentioned, the pretty face.
Appreciate it. Kaaren, how about you? Is there anything else you want to touch on?
I think a takeaway when you think about retirement accounts is make a contribution, invest in yourself. And as Amanda Hahn, my CPA and a great CPA, she says, invest in yourself and pay yourself and not the IRS. So that's what I suggest. Go make a contribution to your retirement account.
I love it. Now that Ryan's gone again, his internet is probably just having the weirdest time.
Yeah.
Actually, that's why I came home. I was having problems in my office as well. So, forget you, Ryan.
Clearly.
Hey, Kaaren, please share your contact information.
I'll just for next time I do this, if that's what's going on, man. Jeez, goodness gracious. I'm like, you know what? I went to my house too, thinking I'm gonna have better internet here, and apparently I wasn't right. So, whatever. Maybe I'll just disclose that next time. Hey, if I just disconnect, it's not because I'm really using the restroom; it's my internet. So I'll make sure to put the right disclosures. Oh goodness. Well, guys, thank you.
But he's been gone for a really long time.
Yeah, yeah.
I'm actually sweating. I ran really fast. So, well, thank you guys so very much. It's an honor to have you a part of my platform. I really do feel blessed, because I know when I can hand stuff to you guys, we just don't worry. You got the best of the best. Yeah. And so for those of you that are watching or listening, feel free to reach out to these two. If you have questions about your IRAs, just the knowledge that's in this room is priceless to have in your corner. So thank you guys very much. And we'll see you guys all soon.
Awesome.
Thank you. Important thing before you go, Kaaren, how do we get a hold of you?
Oh, man. UDirect, IRA.com. We're all over social media, but our website, we have so many blog articles. If you have a question, we've got it answered in a blog article, I'm sure. But again, it's UDirect, IRA.com.
And I will be a little bit more personal. Just shoot me an email, Nate, Nate, at investmentlawyers.com. Love to hear from you.
Perfect. Thank you guys very much. Have a wonderful day, and we'll see you soon.